Okay, good morning. It feels like a long time since we've been together. Class with a couple short announcements. First of all, the URL for class have changed depending on which class you catch. You're either the morning class or afternoon class. So that's pretty straightforward. Next. If you have an Android device, this was pretty exciting. I'm an Android person for the moment, and this was exciting. They updated the app, I think, Friday or Saturday, so now the newest versions of Android are supported. So that's good. Okay, and then, we are going to start to be like our first real class. There's no lecture per se. You watch the video lectures and done the video quiz by tonight. Now, what we're going to do in class today is everything we do in class is based on the video lectures and the chapter. So in any normal week, you're going to be watching the basic concepts doing in class. So, for example, we're going to start today with a false question or yes/no question, I guess it is. So, you're on a device. The first question, all corporations must use the calendar year as their accounting year. So true or false, yes or no. If you click in, we're going to be clicking in. And I'm going to go silent for a minute so people hear. Okay, on this one, why don't we go ahead and put up the answer and then put up the poll? The answer on this one is false. Okay, and let's see what kind. Okay, the answer is false. The reason it's false is a corporation can use any 12-month period as a year. It determines the year that makes most sense for it. For example, Kent State doesn't have a calendar year for its financial statement. It has a year that goes July 1st, 30th. And the reason we do that is because if we cut it off in the middle of a year, that wouldn't make sense. So a corporation or any entity picks the year that makes sense for them. A lot of retail stations have their fiscal year end January 31st. Why is that? They sell a lot of stuff for the season, and then people bring it back in January and off at the end of December. That's going to have some stuff in January for December. So corporations will pick a period, a year that makes sense to them, and sometimes it's really weird, but sometimes corporations use a 50 year, so it ends on like February 1st or February 8th or something. So you can pick what they do, but then they stick with it. So once Kent State made that many, many decades ago to go with the July 1st to June 30th, they stick with it. So they don't change. So we have a calendar year that's January through December. Corporations pick their fiscal year, which is what their year, it can be anything, but then they have to be consistent and stick with it. Okay, we have one more. Okay, from reading. A corporation must pay dividends every year. True or false? Yes or no? Okay, why don't we display the answer and then the poll? Okay, a corporation must pay dividends each year. That is absolutely false. A corporation never has to pay any dividends. A corporation only has to pay a dividend when the board of directors declares the dividend. Until the board of directors says declare a dividend, it's very formal action. They don't ever have to pay a dividend. Now, why corporations pay dividends and how much they pay, that's a whole lot of theory goes into that beyond our scope. But just know a company never has to pay dividends. Only when the board of directors declares a dividend do they have to. Yeah. Okay. So let's start. So today we're going to do several homework problems. This is the other half of Chapter 1 homework. So we're going to start with short exercise 1-10. This is in your book. And we're going to walk through how we do. Okay, so short exercise 1-10. You will see this exercise in your homework for this week. It will have different numbers, different names, but be the same thing. So we're going to walk through several homework problems today. So this first one, they began 2012 with total assets of $100 million and ended with $190 million. During the year, they earned revenues of $97 million and had expenses of $26. They paid dividends of $16 million. Notice that, so this is a housekeeping deal. Notice that they're referring to millions without the 6 zeros, just as the word millions. Don't put 6 zeros in the answer. You kind of follow what's given. So if I refer to million, if I would have to input 100 million somewhere in this problem, I'm going to put in 100. Okay, so go with how they're putting it. By the way, in my accounting lab, if you ever have any doubts about how to enter your numbers, click on the Help Me Solve This. Just go click a couple times and you'll see it'll be pretty evident you don't want the 6 zeros in this. If you put 6 on when you're talking about, when it says million, you're actually talking about what's bigger than trillion. Trillions? Is that a trillion? 6 zeros would make it trillion. So it is a big deal. Okay, so what do we do? I like to read the last sentence or two. And what we're doing, we're preparing the company's income statement for the year ended December 1st, complete with an appropriate heading. So what we're doing today is we're going through very, very basic financial statements. These are the most basic statements we can get. This one is an income statement. So this statement, not only will it help you on your homework, but it's going to be a model statement. So if we have questions about income statements, we know we've done an income statement. So the first thing we do on any statement is we have the heading. Every statement has headers, okay? So let's talk about it. Every heading for a financial statement has 3 lines. You pull up an Amazon financial statement or you look at anybody's annual look at a financial statement, it's going to start with 3 lines. Every one of them is going to start with that. The name is that the name of the company is the very first line. Always going to be the name of the company. Okay? So this one's split second. The second line, and it does matter what order they go in. Okay? So it's always going to look the same. So much of accounting is based on consistency, and part of that is to help you as a reader be familiar with it before you really even dive into it. I know as a reader, I open up a statement, the very first thing is going to tell me what company I'm looking at. The second thing is going to say the name of the statement. What statement is it? There's 4 main statements we look at in here, okay? So we have, and they're done in order, and today we're going in that order, so we start with the income statement, okay? The income statement is how we did, period. Now, the third line down is the date line. The date line can be one of 2 ways, and it's dependent on which statement it is. With an income statement, how did we do this last period? So it's based on a period of time. This is for a year ending. You would not have an income statement for December 31st. That would imply that you're showing what happened on December 31st. And that wouldn't make any sense. So an income statement is always for a period ending. So it can be quarter ending March 31st. It could be for a month ending January 31st. For whatever period of time, that income statement is going to tell you, the reader. And it makes a huge difference. In your own company, if you're looking at an income statement, it makes a huge difference to know whether that statement is for a month or for a quarter. Okay, so then also we have that little off to the side, it says it's in millions. Okay, so that's telling us we don't want to put all those on there. So this is every statement we do starts with, okay, so we have the name of the company, the name of the and the date. And in this case, income statement has to be for a period ending. Okay? So then next on our income statement, the first line of every income statement we do will be revenue. It'll either, now, like anything else, there's a couple for it. In this one, we have revenues, and that's its most basic format. You can also see sales, okay? And you can see sales revenue, so you get a combination there. So we've got revenues, sales, sales revenues, some combination of those words. That is the first line of every income statement. And when you think about if you had a company and you were selling things, your sales go first. Okay, and remember, these are very, very basic, so we'll have other things that go in them later, but right now we're just looking at this overview. So we have revenues. First line of every income statement, the content of it, revenue. So there's my 97 million. Now I got my 97 million from up in the exercise, and it says that they earned revenues of 97 million. Okay, so the second line of every income statement are expenses, and that's also given up in the top where we have 26 million. So I have expenses. Okay, now expenses are going to take a lot of different forms. We're going to see expenses, and maybe even today, next week. The first expense here is typically cost of goods sold. But here we're just going with this basic overview. What's the idea? An income statement is always going to be revenues minus expenses. That's how it is. We can call it sales minus expenses, same difference. But so we have revenues and expenses. Now, a couple things on typically, the first number in a column has a sign in front of it, okay? And this isn't stuff you're going to be, the dollar sign, these rules are not things you're going to be touching on. My accounting lab doesn't care if you put a dollar sign or not. It's fine. Don't put a dollar sign as a rule of thumb. But I'm just telling you, when you look at a statement, these are not random. So the first one, dollar sign. The second one below that doesn't usually get a dollar sign. If you put dollar signs on a single number, it gets really cluttered looking, so we've developed these conventions. The next thing we're going, and then we draw a line, revenues minus our expenses. A single line says, here's a subtotal of everything above here back to the last subtotal. So then our very next line in our little income statement is net income, okay? Okay, net income is revenues minus expenses. Okay, now, a couple things to note. 97 million minus 26 million is 71 million. Notice we do not put a minus sign in front of expenses. We do put parentheses around them. Every user of a financial statement will know that expenses are subtracted from sales. So we don't put a minus sign in front of it. It's just not done. Because it is possible to have a negative expense. So if you would put a minus sign in front of that, that means something different. So revenues, expenses, equals net income. Now, net income has a double underline under it, and that says we're done with this statement. We're not adding anything to it. And then it has a dollar sign in front of the 71 because we typically put a dollar sign after we have a subtotal. Okay, those rules, I'm not going to test the rules for where the dollar signs go. I just want to say that this is not random placement typically. So our statement, basic income statement format, is going to look like this. We're going to have revenues minus expenses equals net income. We start the statement with the header, the 3 lines of header, and a statement, an income statement is for its ending. Okay, now notice in the column that we had lots of other numbers given to us. We had total assets given to us. We had dividends given to us. We don't use every single number, just like in, we do not use every number that's given to us. We pick out the numbers that we need. So that's part of this, is distinguishing what's important. Okay, so another question. This one should be pretty straightforward. Net income, how do we compute net income? Is it A, revenues and expenses, or revenues minus expenses minus dividends, or is it B, revenues, expenses, C, revenues minus expenses? You can answer not in the chat window, in the poll. Okay. Yeah. Yeah, you have to give us a minute to put it up, but just wait. So, okay, C, revenues minus expenses, D, revenues minus expenses plus dividends. If sound's breaking up for you, that is a function of your internet. Okay, note that this is a good time to this. If sound's breaking up for you and you're on, if you're not in this room and you're on a computer, you can call. There is a toll-free number you can call to get sound on the phone, and that will take care of any phone issues. And you can always chat with Brian about the number, right? Okay. Okay. So again, you can call using the teleconferencing option. Yeah, so if you're on a laptop, you have the option of calling in, and Brian will put the number in the window. Are you good on that? Okay. Okay, what's your answer here? C? Okay. Okay. Right. So go ahead, display the answer. I'll display the answer. Okay. Okay. It is revenues minus expenses. Something to note, Okay, so we're back?
Can you hear now?
Yes, somebody. I heard somebody. Yeah. Okay, so not a big deal. Okay, so now on this one. Okay, so again, dividends are never subtracted from to get net income. Dividends are a return of owner's equity. Okay, so we can advance then? When total expenses exceed total revenues, the result is there's no sound right now because I'm walking around the classroom. Brian will tell you when I start talking again. Okay, let's display the answers. Okay, and so when total expenses exceed total revenues, our answer is going to be a net loss. Okay, so if revenues exceed total expenses, then that's where we have a net profit. But when we have expenses greater than our revenues, that's a net loss. So we have a net loss, net profit. Okay, so let's go back to our next statement. So the first statement we do is the income statement. So then we go on to our next statement that we prepare is the statement of retained earnings. Sometimes we refer to it as the statement of stockholders' equity, but it's one of the equity statements. So we start with the income statement. We compute our net income. Next one to be prepared is the statement of retained earnings. So we're going to walk through this. Notice that they gave us a bunch of data, but I skipped to the last sentence that said, prepare their statement of retained earnings. So the first thing we're going to do is we are going to put up the headings for the statement of retained earnings. So first, every statement starts with the name of the company. The second line is the name of the statement. So we have Cell Phone Corporation, we have statement of retained earnings, and then the third line is the date line. Now the statement of retained earnings is like the income statement in that it's for a period of time. Okay, so we have the name of the company first, we have the name of the statement next, and then the date. Now again, statement of retained earnings is for a period of time. So this is for the year ended. So, and again, we're doing millions, so we'll go on. The first line of this statement is the beginning retained earnings. I don't have the word beginning there, but that's what it is. The beginning retained earnings for the year December 31st, 2012 is the retained earnings as of the end of last year of 2011. If we end retained earnings on December 31st with $290 million, that's what we start the following year with. So that very first line of the exercise says they began 2012 with retained earnings of $290 million. So the very first line of retained earnings statement is beginning retained earnings, $290 million. Okay. Now, the next line of the statement, we actually have to use net income. We have to compute net income. So what I've done is net income is revenues minus expenses, right? We would have just prepared the income statement. So to get our revenues minus our expenses, our revenues during the year, they told us were $360 million. $360 360 million. Our revenues, our expenses are 250 million. Okay, so our net income then will be the difference between those two. Went on for a minute. So our net income is 110 million because we have the revenues of 360 million. We have the expenses of 250 million. So our next line, we're going to have the things I've circled are going to go away. Our next line, we're going to have our net income. Okay? So our net income, we're going to add our net income. Retained earnings is like a running total of everything we've made to date. So we're going to take our beginning retained earnings, add the net income that we earned this year for that year ended December 31st, 2012. And then what we're going to do is we're going to subtract out dividends. We said dividends are not on the income statement. Dividends are on the statement of retained earnings. The statement of retained earnings is a running total of everything we've made to date less the dividends we've paid out. So this is a case where we do subtract out dividends. When you see parentheses around a number, it means it's negative or being subtracted out. In accounting, typically we don't use a minus sign, we use parentheses around a number to show it's negative. Okay, and then what we do is we have a total then. So we're going to take our retained earnings of 290, add our net income of 110, and subtract our dividends of 44, and we get our ending retained earnings of 356. It depends. The question is, do we use the add and the less when you prepare a statement? Like you're talking about preparing one in real life?
Yeah, like is it just going to say net income?
It depends. Companies can do it different ways. That's not dictated, so it doesn't. Add doesn't necessarily need to be there, and less doesn't necessarily need to be there. They're here just so I could show you what was going on. Yeah. Okay, so something to note so far. So we've done income statement, which was as for a period ending. We have retained earnings, which is for a period ending. Our next statement that we do is the balance sheet. The balance sheet is the one statement that is as of a certain date. That's our one of four. Out of the four statements we're doing, one statement is as of a one particular date and time. But this one is year-ended. So you absolutely need to know of the four statements which ones are as of a certain date and which ones year-ended. So we've got three that are for year-ended and one that is for a particular date. Now we're going to do short exercise 112. Okay, short exercise 112, we're working our way down. I look at the last sentence to determine the last little paragraph what they want me to do. They want me to prepare a balance sheet, okay? And we have to use the accounting equation to compute retained earnings. So what we're going to do here is accounting equation to compute retained earnings. Remember we said that the accounting equation is assets equal liabilities plus equity, okay? So that assets equal liabilities plus equity, we talked about that last week. Now, equity is composed of two things. Equity is composed at this most basic level of common stock and retained earnings. We'll add other things in later, but for right now, equity is common stock and retained earnings. This problem tells us that it doesn't give us retained earnings, so we have to calculate it. So what I'm doing here is I'm just saying, okay, my accounting equation is assets equal liabilities plus equity. I know that equity is common stock and retained earnings. So my revised accounting equation, which means absolutely the same thing, is going to be assets equal liabilities plus common stock plus retained earnings. Okay? So we haven't done anything fancy here. We're just looking. They've given us all these other numbers, and we have to solve for retained earnings, so we need to separate it out. When I said that we're going to be using the accounting equation all semester, and this is an example of how we would do that. A lot of times you look at earnings releases or information from companies, they don't give you every number, but you can back into something that you need. Okay, so that's the basic formula in words. Okay, so I filled in some numbers here, so I've done a two-step process. Assets. In the problem, I've circled them in purple. The assets, it tells me, as we'll start reading, the company has cash of $12,000, so that's an asset. So what I'm doing there is I'm putting down the assets under the $12,000 under assets, reading receivables of $8,000. Receivables, accounts receivable is an asset, so I'm going to use that as an asset. Then the next thing, inventory of $44,000, that's also an asset, so I'm going to add that to assets. And then the equipment totals $88,000, that's also an asset. So all the numbers in purple, those first four numbers on the bottom there, those all represent assets. So then moving on to liabilities. Liabilities, we have accounts payable $13,000 and long-term notes payable of $80,000. So those two items together are our liabilities. There's no other liabilities listed up there. So I've not completed the equation yet. I'm just doing assets and liabilities at this point so we could see where they came from. Okay, so I still haven't dealt with the numbers in red yet, the common stock and retained earnings. So now, common stock, it tells me up above, is $15,300. I didn't circle it. It's the last sentence of the first paragraph. So common stock is $15,300, and then I don't know what retained earnings is. So all I'm doing at this point is I'm saying, okay, now I know what assets are. If I add all of those up, if I add the liabilities up, I have the common stock, I can solve for retained earnings. Okay? So when I do that, when I rearrange the numbers to solve for retained earnings, I get 43,700. So I'm going to take all the assets, all the purple numbers, and then subtract 13,000, 80,000, and 15,300, and I come up with 43,700. Now I haven't really even started the problem yet. All I've done here is I've gotten my retained earnings. So this 43,700, it's a number I need to calculate ahead of time. So now what I'm going to do, the requirement is actually to prepare the balance sheet. Now a balance sheet is a list of everything we own or owe at one particular point in time. So I'm going to leave this screen because I don't have room to do the balance sheet with all the stuff on. But the takeaway here is that retained earnings is 43,700. So what we're going to do now, we're going to actually work on what the problem calls for, and that's to do our balance sheet. So balance sheet, it's another statement. So it starts with the name of the company. Second line down is the name of the statement. So these statements are all very standard. Name of the company is first, name of the statement is second, And then the third line is the date line. The balance sheet, you could think of it as a camera. It's a snapshot of one point in time. When we have a balance sheet, we're listing, the first thing on the balance sheet coming up, by the way, is cash. Cash is always first on the balance sheet. Always, always, always. So we have cash first. That's a picture of how much cash we have at December 31st, 2012. It's not a picture of every cash balance from every day. It's a picture of what's in our bank account right now on this date. It's not the cash from yesterday. It's not the cash for tomorrow. It's what's there this date. So this is the one statement of the four formal statements that is as of one date. Every other statement is for a period ending. By the way, these headings, the name of the company, the name of the statement, and the date, these are easy points for you to pick up. On your exam, you're going to have homework exercises, not all of them, but selected ones, on your exam in My Accounting Lab, just like you do the homework. And those are easy points to get. You don't have to do any computations. You just have to think, well, the first line is always the name of the company. Second line is always the name of the statement. And then you've got your third line, which is your date line. And you have to remember, balance sheet is one date. The other statements are a range of dates. Okay, so we're starting with assets, okay? So assets, we've got some real basic ones. We're going to keep adding ones each day in class. And so we're going to start with the ones they gave us here. They gave us very limited assets. They told us we had cash of $12,000. We have receivables of $8,000, inventory of $44,000. Now we have a distinction with assets between two types of assets. We have current assets and we have long-term assets. Current assets are all assets that are going to convert into cash, basically, or be used up within a year. Okay, so balance sheet. Our balance sheet actually can go down in one row. You can have it all so very long. My screen's not big enough to put the whole balance sheet on, so we're going to go on to another screen in just a minute, but we're going to finish the assets first. So a balance sheet is a visual representation of the accounting equation. So if you want to think about the three sections of a balance sheet, you have assets, equal, and then you have liabilities and equity, and that is exactly how a balance sheet is presented. So we're starting with assets. Current assets are first, and then long-term assets. So next, the long-term asset, equipment, we would not expect that to be used up in a year, so equipment's always a long-term asset. Okay, so we get total assets. So here's a good case where we are adding cash plus receivables plus inventory. So we're adding the 12, the 8, the 44 to get 64,000 of total current assets. Then we have equipment, which is 88,000. So we have another single underline. So we add the 64 and the 88, and we get total assets of 152,000. Our accounting equation is assets equal liabilities plus equity. So we are done with the asset section. So we do a double underline. This 152,000 is our total assets. What do our liabilities and equity have to equal? 152,000, right? So we already know what the other half equals, okay? So we have assets and then liabilities and equity. So what we're going to do now is we're continuing with the balance sheet. We're continuing with the balance sheet, but I don't have room here, so we're just going to go down, move our way down. And now we're on to liabilities. So it's liabilities and then equity, but liabilities and equity are added together. So for our liability section, if I look at what they have, they owe accounts payable of, okay, we have a question. That's actually a good question. You don't have to write long-term assets, just put it after current assets. This, again, there's no hard and fast rules on that. Typically, you'll see companies when they have a bunch of them, they'll put long-term assets and then list them. We can see balance sheets that don't say current assets. but that certainly those current assets are first and they're subtotaled, and then the other ones. So there's no hard and fast rule whether we need that header that says long-term assets or not. Same goes for liabilities. We split our liabilities between current liabilities and long-term liabilities, but there's not a hard fast rule, especially in these problems when there's not very many assets or liabilities. Okay, so liabilities, in this particular problem, we have a total for current liabilities. Typically, we're going to see totals for current liabilities and current assets. And let me tell you the reason. The reason we are so interested in current assets and current liabilities. Current assets are those things that are going to turn into cash or be used up within the next year. Current liabilities are those debts that we owe within the next year. So as an analyst, when I'm looking at a company's financial statements, balance sheet, I'm very interested, can they pay their debts, their current debts, out of their current assets? Do they have the resources to pay what they owe? And that's why it's split between current assets and current liabilities, so we can look at their ability to pay debt. Okay, so we have current liabilities. It seems silly to subtotal, but we're subtotaling here to emphasize that these are current liabilities. And then we have long-term notes payable. And again, whenever you see current and long-term, the distinction is within 12 months, within a year. So our long-term liabilities, we have long-term notes payable, $80,000. Okay, now, I draw a single underline. So my single underline under the 13,000 tells me add everything in that section above, and it's 13,000 plus nothing equals 13,000. Then I put my 80,000 of liabilities, and then I draw a single underline. And that single underline says add everything above up to the last total or subtotal. So I'm going to add the 13,000 plus the 80,000 to give me total liabilities of 93,000. Now I'm putting a single underline under the total liabilities. The single underline says I'm done with total liabilities. Okay, so I'm not adding anything else to liabilities. But I'm not done with this part of the balance sheet because the accounting equation is assets equal liabilities plus equity. So we've got something else to do. We have to do equity. So that's a single underline to say we're done with this subtotal. We're going to do something else, but we'll probably come back to it. So we're going to go on to the next section. Again, we're working our way down. There's just not enough screen real estate to put it all on. So we're working our way down, and then we do our stockholders' equity section. Now, stockholders' equity at our point in time right now is basically two things, common stock and retained earnings. We'll see things later that there's more things that go in here, but for right now, that's what we need. Common stock is given to us at $15,300. Retained equity, retained earnings. Retained earnings, we calculate at the very beginning, that's $43,700. We calculated that, so we're good. And then I get my total stockholders' equity. Total stockholders' equity, $59,000. And that is adding common stock plus retained earnings. Okay, now, total liabilities and stockholders' equity is adding our total liabilities no, don't move. Okay, so that total liabilities and stockholders' equity, if you look right above on your screen, total liabilities were $93,000. So the $93,000 plus the $59,000 of total stockholders' equity gives us the $152,000. Now what I'm going to do is I'm not leaving this. I'm going to put the whole balance sheet on one screen here. Okay, so this is what we were just doing. It's just all on one page now. The first section we did was assets. Okay, so that's the $152,000 of assets. The next section that we did were liabilities. Okay, and there was the $93,000. And then the third section we did, which is part of the liability section, is the stockholders' equity section. Okay, so taking the total liabilities, adding the total stockholders' equity, that gives us our $152,000. Our balance sheet has to balance, absolutely positively. Assets have to equal liabilities plus. There's a question about, do you use a dollar sign after the common stock value? It's debatable. Usually, yeah, but again, we're not going to focus on that so much. I just wanted to explain why you don't see a dollar sign on every number. So $93,000 plus $59,000 gives us $152,000. Our balance sheet is said to be in balance now because our assets equal our liabilities plus equity. That's a very, very basic overview of a basic balance sheet, but we have to do the balance sheet after we do the income statement and after the retained earnings, because what's happened so far is the income statement, you come up with net income. The net income is used in the statement of retained earnings to get your ending retained earnings, and then the ending retained earnings shows up on stockholders' equity, that retained earnings. So that's why we have to do these in this particular order. Okay, so let's do a question now. Okay, let's put up the answer, Nicole. All financial statements are as of a specific date. That is false. Which statement is as of a specific date? Balance sheet, yes, excellent, yes. The balance sheet is the only financial statement as of a specific date. Our other three statements, we've looked at the statement of retained earnings and the income statement. They're both for a period ending. The balance sheet is the only statement that's as of a specific date. And the statement that we've not done yet, the statement of cash flows, that's also for a year or a quarter for a period ending. So what we're going to do right now is Brian's going to switch to the second half of class. So I'm going to pause here for a moment and ask if there are questions about anything. I'm taking questions about anything while he's getting ready. Yes?
Like eventually, like with the balance sheets, like a debit and credit side, or is that not the same?
Okay, the question is, eventually, is there going to be a debit and credit side? That actually comes before the financial statement, so that will be by Chapter 3 we will see that, yeah. But that's a trial balance, and that's what we do to get our financial statement. So that's actually predates what we did. We just skipped to the end view, and then we'll come back. Okay, any other questions about anything? Wow, that was fast. Okay. 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 Wow, that was a really fast switch. Okay, so now we have another question. The income statement measures operating performance, true or false? Okay, let's go ahead and publish this one. Answer and publish. Okay, income statement measures operating performance. That is true. Okay, we're looking at how the company did. Here's its revenues, here's its expenses, how did it do? So that's operating performance the income statement measures. Okay, now we have my favorite kind of problem. Now we're into numbers. Okay, so get ready to do a little calculation here. At the end of the current accounting period, account balances were as follows. Cash $15,000, accounts receivable $20,000, Common stock, 8,000. Retained earnings, 14. What were liabilities for the period? So I'm going to give you all a minute. It's going to be quiet for a minute. I'm going to give a minute, and then I'm going to walk around and put you on the spot. So have a number. Okay, back here. We'll start back here. So what do you think the answer is? B, maybe B? 20,000? Okay. A? 13,000? Okay. What do you think down here?
I think B.
B? Okay, the 20,000.
I guess A.
Yeah, 13? Okay. So we have 13. So what do you think? We were getting the answer.
B.
B? Okay. What do you think? The 13? Okay. What do you think?
B.
B? So we're flipping back and forth between A and B. What do you think?
B.
B? Okay. You can't do this in your head, right?
Huh?
Can you do this in your head?
Yeah.
Wake up, right? Okay. Okay.
A.
Yeah, you did it, yes. Do you know what you're doing on this one?
A.
A, okay. Okay. I hear a lot of, see, no, I don't hear nodding, I see nodding. I'm not hearing your head nod. Okay. Okay, why don't we display the poll? Ooh. Okay. So we have popular answer is A, and then we'll go to the answer. Okay, and A is indeed, 13,000 is the answer. How we do that, we go back to our assets equal liabilities plus equity. I can rearrange that to solve for liabilities. So what I'm doing here, I have assets, cash 15,000, accounts receivable 20,000. Those are my two assets. My equity is 8,000 for common stock and retained earnings for 14, so I subtract those, and I'm left with liabilities of 13. Okay, so we're going to use that accounting equation over and over as we go. Okay, okay with that one? Okay, exercise 114. For an exercise 114, we're going to do a couple of them just to get the hang of it. But this is an exercise that lists a lot of different accounts. So we have a lot of accounts given, and we have to tell which items. Brian's going to practice writing on the screen. So we're going to tell which statements these items go on. So we have an income statement, which we can just abbreviate I. Statement of retained earnings, we'll use an RE, or an R, I guess. Balance sheet B, and statement of cash flow C. Well, you don't need to write them right now, but yeah, that's when we go. Okay. Okay, so first of all, dividends. Dividends are a hard one because they go on two statements. They go on a statement we haven't done yet. So dividends we first of all saw on the retained earnings statement, so we're going to put an R there. And dividends, we haven't seen this one yet, are also on the statement of cash flows. Read my mind, yes. So dividends are going to show up on, maybe not so much. I'll tell you what, why don't you go to the next slide, Brian? Look, magic! Okay. Okay, so I'm going to just talk about a couple of these. Maybe I'll be quiet for a minute, let you write them down, and then I'll talk about a couple that are noteworthy. Okay, so let's see. As we run through these, dividends is on the retained earnings statement and the cash flow statement. Salary expense is on the income statement, is an expense. Inventory is an asset, so it goes on the balance sheet. Sales revenue, that's the very first line of an income statement. Retained earnings show up on the retained earnings statement and the balance sheet. Okay, F, that one, this is just a trust me on this one. Net cash provided by operating activities. We're not doing a cash flow statement yet, but that's what one of the things on there is. Net income is on 3 of the 4 statements. It's the one that appears on more statements than anything else. It appears on the income statement, retained earnings statement, and cash flow statement. Cash itself shows up on the balance sheet and the statement of cash flows. Net cash used for financing activities, another trust me, it's on the statement of cash flows. J, accounts payable, is on the balance sheet, that's a liability. Common stock is an equity account on the balance sheet as well. Interest revenue is on the income statement. Long-term debt is a liability on the balance sheet. And then finally, increase or decrease in cash, just the change in cash, that's on that statement of cash flows. The statement of cash flows is one of the last chapters we do. They have in the book, they have it here, so no, it exists. It tracks the cash in a company, but I think it's something better left till towards the end of the class to really get into. So that's why we're not talking about it much. Okay, so what we're going to do now is we're going to do another homework problem, exercise 1-17A. And this is one of my favorite exercises because it's so neat. It's so kind of like a puzzle, but it's not a very hard puzzle. It's kind of fun. So, first thing, it tells us that we have current assets of $280 million, property, plant, and equipment of $430 million, and other assets of $170 million. Great. Current liabilities are $170 and long-term liabilities $300 million. Okay, so the first requirement, so they gave us a bunch of numbers. First requirement is to write their accounting equations. Okay, so I'm going to start, whenever I see accounting equations, the best thing I can do is I can say assets equal liabilities plus equity. There we go. Okay? So I write down what I know. I know the accounting equations, assets equal liabilities plus equity. But now I have to put some numbers in there. Okay, so I color-coded these. Hopefully the colors show up. Assets. The assets that I saw up there, we had current assets of $280. I had property, plant, and equipment of $430, and I have other assets $170. So if I take the $280 plus the $430 plus the $170, that gives me total assets of $880. So those are the red numbers that I've written down. Then for liabilities, it told me I had current liabilities of $170 and long-term liabilities of $300. So if I take the 170 plus the 300, I get 470 as my liabilities. Those are the purple numbers. Okay? Now the number that I don't know is equity. So I get down to like my third line there where I have my total assets of 880, my total liabilities of 470, plus my equity. So I have to solve for my equity, which I'll take the 880 minus the 470, gives me equity of 410. Okay, so it's just applying the accounting equation in a different way. And then so when the problem says use these data, requirement 1, use these data to write their accounting equation is actually 880 equals 470 plus 410. That's my assets equal my liabilities plus my equity. So that is requirement 1. That's what they're asking for requirement 1. So we had to solve for equity and then state it in that format. Okay, so that was requirement 1. Now, as we go down now, the next 3 questions, once we have requirement 1 down, the next 3 questions are super easy. It's a matter of interpreting what we have. So question 2, how much in resources do they have to work with? Assets. Okay, assets are resources to work with. So the answer is the total assets, 880. Okay, now next question, how much do they owe creditors? Now, how much we owe creditors, that's liabilities. So that's going to be the 470. And then that last question, this last question I can probably tell for someone that doesn't come to class and then hop straight to the homework. This question is one of my most popular. Help me solve this question. They'll say, how much of the company's assets do the stockholders actually own? Anybody know the answer? What would seem logical at this point? Yeah, 410, right? So next one. The answer for the 4th question, how much of the assets the stockholders actually own is the equity. So once you do that accounting equation, the rest of this just falls into place. Okay, that one's not bad. We have a true-false question. Net income is the profit left over after subtracting expenses and losses from revenues and gains. On this one. Okay, so let's publish the answer, press the poll. Now, this one, you had to kind of read between the lines. This is in the chapter. This refers to some of the examples they showed in the chapter. The answer here is true. Now, our basic format of the income statement is revenues minus expenses. Now, gains are they behave like revenues, so we'll group them with them. Losses behave like expenses, so we'll group losses with expenses, gains with revenues. So our net income is taking our revenues and gains minus subtracting our expenses and losses. So that's fundamentally there. Okay, there are, go ahead. Okay, now there are 2 more homework problems that we did not do today. What I do on this too, because we can't cover every single problem all the time, I did record walkthroughs of how to do them, and those will be on Blackboard by the end of today. So there's going to be, we have those. What's due this week? We have homework, Chapter 1, Part 2. So that's these problems we did in class today. It's the 2 that I'm going to put the walkthroughs up if you want to watch them. There's an attendance quiz that'll be available today after 5, and it's over the material we covered in class today. And then Sunday, September 8th, video quiz 5, that covers Chapter 2 lectures. So when we start next Monday, it's a full week, it's our full regular week, but when we start Monday, we are coming in, we're going to do exactly what we did today. We're going to start with some questions, we'll do homework, but what's a basic conceptual lecture, that's what you're doing by Sunday night. Okay, have a nice day.